Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. We had a little bit of lackluster trading today in New York, as many traders are still sidelined because of power issues and transportation issues after Hurricane Sandy in New York. But we did have a little bit of volatility in Asian and European tradings, where many of the majors pushed lower against the US dollar, where the pound and euro broke through significant support levels but couldn't find much of a follow-through. Heading into today's Asian trading, we have a little bit of volatility could be created by the Reserve Bank of Australia rate decision. The news release or conference after the decision could add a little bit of insight onto the RBA's future policy regarding interest rates, where it could give us insight into the state of the economy and, as always, exports and imports to China. Heading into that, we can see that the Aussie USD is clearly in a wedge, where the top of the wedge is created by 104.10 and the bottom is created around 103.20. The resistance zone between 104.10 is also marked by the beginning of at the 50 fib at 103.86. So we can see any move above this zone could create a push higher towards ultimately 105.20. Now, if we break below the descending trend line, we could be on our move down to 102.50 followed by 102. So what I'll be watching for in this decision is to see if we get a bounce and we do remain inside the wedge, or if we break below, then we could look for a move lower towards the price targets I mentioned, with the support at 102.5 and so forth. And if we break to the top side, 105.20. The next pair we're going to take a look at is the Great Britain USD cross, because you can see that pair managed to break through the 0.382 160 fib level, which had acted as the bottom of its range last week in trading. The pair didn't have much follow through on that, and you can see it moved to daily price support right around 159.60. It'll be interesting to see how the pair reacts if we get a push back up to the 160. If we break above that, we could just move our back into this range and see more trading. Actually, it would be a broader range, and this would be the bottom support at 156.60. But if we do get a momentum through this, though, we could find support relatively soon at the 159.03, which is the 50 fib, which buyers could emerge at that point looking for a push, regain momentum towards the top side. The last pair we're going to take a look at is the Euro USD, because you can see the Euro USD, similar to the Great Britain pound, did break below the price level that had held up the cross for the majority, well, for the entire month of October at 128.25, and now the pair is quickly though moving down towards resistance at the 127.50 and the 0.382 fib at 127.34. This level could act as serious support, and we could see a bounce here. But if we break below that, we could be off to the races to a push down to 126.02. All right, traders, this is Chris Keene. This is a Keene Point of View. Keep your eyes open for the RBA rate decision, and good luck trading. This is Currency Watch.